Hello, good afternoon, good morning, or whenever it is that you see today's episode. I'm Jonathan Bengal here, host of Naked Tax Talk, where babies we bear down to the naked truth about who we are, about our personal lives, our monetary lives, and of course our business lives. And the reason for this is because what I know to be true is that when we improve upon the self, our business is a reflection of who we are, also improves, and our money, which is a reflection of our businesses and who we are, also increases. And when you work with someone like myself, a certified tax planner, the taxes go down with the more money that you make. Now, I wanted to come on today. I was supposed to come on yesterday, but could not. But I am instead here because I really wanted to talk to you guys about a very important new notice issued by the Internal Revenue Service. So I don't know if you guys know this or not, but when it comes to taxes, they are essentially first created through acts of Congress. So, for example, with the new American Rescue Plan of 2021, inside of that were a whole bunch of tax provisions that were created in order to incentivize business owners to make decisions in their lives. In fact, I just completed my afternoon coffee and learn with me to talk about something called the employee retention credits. If you're interested and you'd like to get a copy of that recording, simply leave a comment, let me know, shoot us an email. Let's get naked at nakedtaxtalk.com or send me another one, happiness at jonathanbengal.com, and you'll get access to the recording. Very powerful, up to $100,000 in tax credits. But I really wanted to talk to you about this new notice, IRS Notice 2021-25. Now, I promise that I will try to keep the legalese limited, but you should notice that this is the notice that essentially comes out and says, this is what Congress wrote. This is our interpretation of what Congress wrote. And we are going to define terms with inside of that law. So would you find it helpful if we talk about what they mean? I think you would. So here we go. So first things first is that on Thursday, the IRS released guidance explaining the temporary 100% tax deduction for restaurant meals, food, and beverage that's available that was previously limited to 50%. Basically, we're going to look at code section 274 for my experts out there. You can go check out that code yourself. But essentially what code section 274N1 says that any deduction for any expense for food or beverage is generally limited to just 50% of that amount that would otherwise be deductible, basically saying that all of your meals and food and beverages pre the American Rescue Plan, essentially, you would have been limited to 50% of that expense. So meaning, and by the way, you have to have five Qs, five thingamabobbers, 5 checkpoints that you have to hit to take the meals deduction. And so the first thing is we have to have a purpose, we have to have a place, a date, who we met with, we have to have met with somebody, and ultimately the amount that we spent, including the tip. So pre-American Rescue, you would have been limited to 50%. In fact, in my number one best-selling book, The ABCs of Deductions, which I'm reaching for right now, I actually talk about this under the letter M and what the human principle is behind this deduction. So basically, the Consolidated Appropriations Act of 21 essentially enacts a temporary exception to the limitation for the amounts that you pay or incur for meals and entertainment. For meals and food and beverage after December 31st. So basically, this is going to take place in 2021. And before January 1, 2023. So the actuality here is that we're going to be able to take 100% deduction for our meals for 2 years, 2021 and 2022. And this was all designed to essentially keep restaurant owners, keep them alive. And so basically Uncle Sam is telling every single one of us as business owners, go out there and start eating out at restaurants, which is crazy, counterintuitive to COVID, but I digress. So essentially what it's saying is go out there. I have clients that own a company here in town called Pop and Tea Bar here in Phoenix, Arizona. Great tea, by the way. Great, amazing. They self-engineered a gelato bar, like yum, yum, yum. But the point is that Uncle Sam is basically telling us as business owners, get out there and invest in restaurants. Spend some money in the restaurant. So, we're going to call up our colleagues. We're going to call up our referral partners. I have a date with the bankers in a couple of weeks, taking my my referral partners, my potential clients, my current clients, all of that, right? We're going to start systematically thinking about ways in which we're going to start having meals and drinks together because we're entitled now to 100% of the deduction from now until the end of 2022. Now, all of that sounds fantastic until the IRS comes out on Thursday and says that, whoa, 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 whoa. Okay, whoa, whoa, whoa. Now, when they talked about the 100% meals and deduction, they said what we really meant was, and this is key, that the term restaurant means, and I'm reading this directly from the IRS's notice, a business that prepares and sells food or beverages to retail customers for immediate consumption. A business that prepares and sells food or beverages to retail consumers for immediate consumption. So this isn't something I'm going to order and then I'm going to eat it a week later. This is going to be something that you're going to go into an organization, into a restaurant, and they're cooking or making you a beverage on the spot, like right then and there, right? You're talking to the hostess and to the waitress or waiter, placing your order, getting the food made, getting your drinks, regardless of whether the food or beverage are consumed on the business premises. So that's the key too. So you don't have to consume the meal or the beverage on the premises. You could take it back to your office. You could take it to a park. You could do something else, right? So you're going to go to a restaurant as defined as preparing food or beverage immediately, right there and then on the spot. A restaurant does not include a business that primarily sells pre-packaged food or beverages not for immediate consumption. So what they're saying is pre-packaged food or beverages. So I can think of a few ideas, like, for example, fast food. Like Circle K's or, Chevrons at gas stations, things of that nature. In fact, the IRS even tells us who is not a restaurant. So who is not a restaurant? This is you. If this is you, a grocery store is not a restaurant. Therefore, if I go into an Albertson, Safeway, or HEB or something like that, HEB is Texas, by the way. But if I'm going to go into one of these places and I buy pre-packaged food like frozen pizza, and then take it back to the office and then meet my client, cannot take the deduction at 100%. Not allowed. But if I go to a pizza joint and I bring my client, future client, referral partner, business partner, etc., I'm going to be allowed to deduct it because I'm in a place that's being immediately prepared to consume. Yum, 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 yum. So grocery stores, specialty food stores, beer, wine, or liquor stores, and drugstores, convenience stores, newsstands, or a vending machine or a kiosk. So this is very important. If you are a business owner right now and you're turning into this episode, this impacts you and me and everybody else. So if I go to a grocery store and I buy a prepackaged meal, no 100%. If I go to the newsstand in passing and I pick up a candy bar for me and my client because we're walking together and I pay for his candy bar, not allowed. If I go to a specialty beer joint or a wine joint or a liquor store to get, beer or whatever, because we're going to consume it, back at our office together and celebrate whatever, not allowed. So the idea here, and keep this in mind, so I think the best way to think about this is that it's a restaurant is a place of business that's kind of like cemented into the ground, and that's its primary purpose. Its primary purpose is to cook you something or make you something right then and there so you can munch, 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 and fulfill your hunger needs or your thirsty needs, okay? So if I go to a bar and have a drink with some buddies, aka future clients, potential clients, referral partners, you get what I'm saying, business partners, and we have a beer at a pub, totally allowable. But if I go to the liquor store and get the liquor and then bring it back, not allowed. No, 100%. Does that make sense? If I'm making sense and you're watching my episode right now, let me know if what I'm saying is making sense. Hi, Mom. She's saying hi to me. Hi, Mom. So do we understand? So if you're a business owner, the 100% meals and beverage deduction is only allowed for physical locations of restaurants. Just think of it that way. If I'm going to go to, again, my client's Pop and Tea Bar, which is on 7th Avenue and McDowell here in Phoenix, and you go into their restaurant and you order yourself some coffee, and you've got somebody there with you, got to have a purpose, right? I keep saying it. Clients, future clients, referral partners, business partners. I bring them in with me and I buy them coffee or tea in this case, then I'm going to deduct that 100%. Now, if I go to the other situation, the non-restaurant location, the liquor store, the convenience stores, the newsstands, blah, 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 I'm still going to be able to use my business funds to purchase said items so long as I meet the 5 rules for the deduction. But I'm now going to be limited to 50%. Yes, you're going to be limited to 50% if it's not a restaurant that's physically located, right? That's preparing an immediate food or liquor or beverage to be consumed immediately, right? So all I can tell you right now is that if you are an accountant or you're a bookkeeper right now, the question you're going to need to start asking your clients when you see the meals coming through on their credit card charges or their debit card charges or however, we have to start asking the question now, was that a convenience store? Was it a newsstand? Or was that like a legit restaurant you went to? If you are a business owner and you're working with a professional like ourselves, you can make our lives a whole lot easier by letting us know that you are in fact going to a convenience store versus going to, a real restaurant, quote unquote. Okay, so Sarah's asking a question. Let's answer her question. Sarah says, so you suppose we need 50% and 100% chart of accounts for everyone now immediately, right? Ugh, girl, let me tell you right now, okay? So first of all, bookkeeping, aka income and expense tracking, it's not simple. It's not easy, peeps. I'm telling you right now. And yes, Sarah, I would break up. In fact, I love your suggestion. I absolutely freaking love your suggestion. Yes, I would actually go in and create a separate chart of account item, call it meals 50%, meals 100%, and then you and I both know that we'll classify it as meals, and then we will take care of the limiting factors when it comes to filing a return. But I love that idea. In fact, I didn't even think about that till you said that. So I thank you, Sarah. Thank you for sharing that with us. We're going to use that too. Yeah, I love that. So every business owner, if you're tracking your own books, or again, you're working with a bookkeeper, an accountant, somebody who's tracking this for you, take Sarah Michael's idea. I love it. And encourage them to create 2 subcategories, one for 50%, one for 100%. Okay, what does she say? I don't want to nag my accounting clients any more than I already do. Rules. Yes, girlfriend. Yes, we don't want to annoy our accounting clients anymore. But here's what I'll tell you, and this is what I know to be true about being an accountant myself, is that ironically enough, our clients do appreciate, at least mine do, they really appreciate being bugged. They actually do. And the way I look at it is, it's not about nagging them. It's about helping them to become more educated. So it's like, this is a new rule, something we have to do. Here's why. And it continues to make us look like the expert, which we are, and therefore continues to make us valuable and continues to justify our value so that when we do charge what we charge, it's reflected in the value. Okay, let's see what she say. 50? Yes, 50%. That's right, 50%, also known as 50%. Yep. Yeah. So that's kind of that's how I would probably propose it is I would, I would let your clients know, why not? This is legit, right? This is part of our job, especially if we're in the tax world like we are. Part of our job is to educate our client base. And so I do it here on my show, obviously, but it's notice 2021-25. And this is what it's going to very specifically tell us. Now, I also want to point out one last little area under section 274N, subsection 2D. And basically, this is going to address the issue of employers who essentially, that employers themselves cannot be treated as a restaurant. So it says the notice explains that this employer may not be treated as a restaurant for section 27.4N2D purposes. So basically what it's saying is any eating facility located on the employer's business premises and used in furnishing meals excluded from an employee's gross income under section 119, or an employer operated eating facility treated as a de minimis fringe benefit, even if that eating facility is operated by a third party. Basically what it's saying is that for the third party or for the restaurant owner that has employees that, I would imagine say, oh yeah, you can have one cookie a day or, whatever, the 100% isn't necessarily going to apply to them. Okay. Can I come over for Naked Tax Talk sometime? I could talk about these things all day long. Yes, Sarah, of course you can. It would be awesome. I would love to have you on my show. I'm always looking for guests to come on my show, especially other experts like ourselves, where you and I can just sit here and just have a gay old time talking about this stuff. I know I like to nerd out on it, in case you can't tell. If you're interested in being a guest, I would love it. Yeah, so you see Postmates and takeout. Now that's quite fascinating. So if we look, by the way, before I forget, the answer is yes. I would love to have you as a guest. I think this would be great. If you want to send me a message on Facebook, that's where you'll find me, Jonathan Bengal, over on Facebook. Send me a message and I'll send you the link so you can become a guest on my show. So yes, I will take you up on the offer. Great question though. What about Postmates and takeout? Well, again, according to the notice 2221-25, it says, again, restaurant means a business that prepares and sells food or beverages to retail customers for immediate consumption, regardless of whether the food or beverage are consumed on the business premises. So this, a Postmates or takeout, if we think about it, they're acting as a third-party administrator. Think about it like that, right? So we're placing the order at, I don't know why Macayo's came to my mind, but it used to be this restaurant here in Arizona. I think it's since doesn't seem to be around anymore. But so Macayo's, let's just pick Macayo's. Oh, better yet, my own clients. I'll give another shout out to them, Papa Tea Bar. So I place an order at Postmates or at Uber Eats or these other places. They go, they get the said item, bring it back for me and my, again, client, future client, for a partner, business partner, or employee. And so for us to and to enjoy it, right? They're acting as a service provider to get the food from point A to point B. So that would still qualify. But if I order Postmates and they go to, if they go to, for example, to Circle K and get me, oh my God, what Circle K I used to love when I was growing up as a kid, when I would get a little bit of change. Back then, it was like 15 cents a piece. But they were those like jelly-filled, like apple strudel things that were like, I'm sure made of a lot of plastic probably. But anyways, those were like my favorite things when I was like growing up. You get 15 cents and then you would go and buy one. So anyway, so if they do something like that, I'm going to be subjected to 50% limitation. Chat, Mikhail's cheap happy hour. I know, whatever happened. So anywho's blues, I just wanted to just let you guys know that this is the new course of action. So again, if you are a professional like me or Sarah, or anybody else out there that's a bookkeeper, accountant, tax person, please know that the IRS is defining restaurant as a place that actually prepares the food and beverage to be consumed immediately on or off the premises. This does not include nightstands, that too, newsstands, grocery stores, liquor stores, things of that nature. Right? Again, they're not in the business to make food or beverages on location. That's the easy way to think about it. As Sarah mentioned, freaking amazing. Go in there, add to your chart of accounts, one for 50, one for 100, and separate that out to make your life easier when you go to prepare those returns. at the end of 2021. So with that, I just want you guys to know that if you liked what you learned today from today's episode, please make sure that you hit the subscribe button, hit the alert button, but more importantly, please make sure you share today's episode with the people that you care about that may gain value from today's episode. I'm also really excited to let you guys know that on April the 30th, we are starting Rapid Tax Savings Formula. It is my 5-week program where I walk women and a few good men through the darkness of taxation and shine the light to financial happiness. We're going to walk them through the 5 pillars of profit. I call it my seed method, where I talk about the number one thing, which is having the profit mindset, believing that you are a badass CEO. I then walk them through the separation of self. How do we actually see our businesses separate of who we are? And then we talk about the entity choice and why that matters when it comes to taxes and selecting the right one at the right moment. And then we move into something called advanced deductions. We talk about 3 major tax strategies that business owners leave on the table. And then we talk about documentation, the thing that's going to save your ass in the event of an audit. And then I throw in a cool bonus. We call this financial happiness mastery. And this is where the real power comes from. I walk you through how to use QuickBooks Online so that you can track your own income and expenses, but more importantly, so that you can read 2 fundamental financial statements, your profit and loss statement and your balance sheet. And why? Because those 2 documents is what's going to allow us as business owners to make better business decisions so that we can go fulfill the dreams of ourselves, but the dreams of our family. And I did this because I realized that a lot of small business owners out there need the foundation. You guys need the basics, the stuff that we hear over and over again, because someone like me as a tax planner, as a certified tax coach, right, as an IRS enrolled agent, we want to have conversations that are above what can I deduct. We want to have conversations around how and do we structure so that we can deduct more to maximize our savings. Those are the kind of conversations we want to have. And so this class is the foundation that gets us started. So it's called Rapid Tax Savings Formula. We are asking for a one-time investment, and you get access to future classes, take it over again, the financial mastery, all that other fun stuff. All we're asking for is a one-time investment of just $9.97. We have over 18 graduates already of Rapid Tax Savings Formula. We only take 10 students per course. We're already up to 5 seats that are reserved. So as of today, we only have 5 tickets available. So if this is something that you're interested in, either yourself or perhaps you know a client of yours that's a business owner that could really use this, please share with them the link. I'm including it right now in the chat. Oops, that's the wrong link. That's to the other class. Let's try this other one. Where are you at? I know I have it. Gotta look for it. There you go. Let's give you this link instead. This is the one that's going to take you to Rapid Tax Savings Formula. Again, it is a very, very successful course. It's 5 weeks long. And I promise that whoever takes this, you're going to walk out with more education than you probably ever bargained for. As one of my clients, one of my students who graduated, Robert, the founder of iNetwork Entrepreneur, said, he even left us a review on Google, and he had said that the most powerful moment he learned was the power of 3, we're to talk about. And he also learned the power of investing in your own family. And we talk about how to actually do that so that you can help, again, the wishes and desires of not only you, but of your family to come true. So Rapid Tax Savings Formula market calendar starts April the 30th. It starts at 3 p.m. Pacific until 5 p.m. Pacific. And those of you who know me already, we work on Jonathan time. So sometimes it's a little bit over. But the goal here is to educate you, empower you, so that you can make better business decisions in your life as a badass CEO that you were born to be. So with that, I'm Jonathan Bengal here. You're going to go out and eat out this year. Let's do it. Just always remember, let's go to a restaurant or a place that prepares the food or beverage for immediate consumption And I hate to say this, but we won't be picking it up from newsstands, grocery stores, grocery outlet stores, specialty stores, and the liquor stores. Until then, may you all have an amazing day, night, or whenever it is you tuned in today. And always remember, when it comes to our taxes and our business, it is con mucho, mucho, mucho dinero. Until then, I'm Jonathan Bengal here, host of Naked Tax Talk. And the next time you tune in, you might find me and Sarah Michael talking about whatever we're going to talk about. Until then, toodles noodles.